You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
My guest today on the Blockchain Interview Series is the CEO of Riot Blockchain. As the saying goes, Jason Less has taken the path least traveled. But sometimes that is what it takes to build a successful entrepreneurial company and culture. Listen, at 35, Jason's career has focused on two industries, crypto and poker. Yeah, I said poker. For over 13 years, Jason was an entrepreneur and professional poker player. For those ETF nerds who also know me as the ETF professor, where benchmarking is presumed commonplace, Jason takes the whole benchmarking thing to a new level. He may be the only CEO who's also known as a human benchmark. From 2015 to 2017, according to Carnegie University, Jason was declared a benchmark for testing the world's best poker artificial intelligence program. In 2018, we made an investment in Riot. Jason back then was not the CEO, but was on the board. It's amazing, Jason, how far you've come since 2018 when I visited you in Oklahoma. Thank you again for joining us today. Talk to me a little bit about your journey here as an entrepreneur. Are you a risk taker?
Yeah. Well, yeah. First off, thank you for having me. And it is amazing to think back on our history together, what Riot was, when you made that visit to our then Oklahoma facility in 2018 and where we are today. Such an amazing growth story that I'm very proud of the company for. But as far as my background, so I basically knew my entire life I wanted to be in computer science. I was a software engineer from a very young age. I knew I wanted to go to school and study computer science. When I got to school to UC Irvine to study computer science, I immediately found the world of internet poker. And it was a time when poker was very popular in the media. A lot of people were playing, which created a lot of opportunity. And it was very intriguing to me because unlike normal gambling games where you have a house edge you are competing against, you are only competing against the other people at the table. So I had this epiphany at this young age where it was, wait, I can make money as long as I am smarter or more strategic than everyone I am playing against. And that really, pulled me in. What also pulled me in was a lot of the tools that I was learning in school with regards to math, probability, statistics, game theory, directly applied to poker as well. So while a lot of people, think of poker as a bunch of old guys smoking in a room somewhere, that Texans, boots up on the table, for me, it was a much different experience. I was a part of this new age of younger players that were really approaching the game from a math standpoint, and we were doing it online on our computers. Instead of playing 30 hands an hour in a casino, you can play 1,000 hands an hour on your computer, really reducing the variance. So that started my passion and interest in poker. That career spanned, about 13 years of playing full time. And over the course of those 13 years, I became one of the best players in the world, especially at a specific form of poker called heads up, which is just one-on-one poker. And that's what I participated in the AI challenge that you mentioned. There were two different challenges where Carnegie Mellon had developed what they believe was the best poker playing artificial intelligence in the world, and they selected the best humans in the world to test that. We got them the first time; they got us the second time, and that was humanity handing the keys over to computers for that. But over the course of my poker career is when I discovered Bitcoin. A lot of people talk about Bitcoin years ago as we talk about Bitcoin today as a lot about digital gold, but years ago, a lot of people talked about it as a potential, just currency. Oh, people can use this to send money around. And for us especially the internet poker community, it was already a tool we were using, for commerce. It was a much better way to store money and send money around. So I was using Bitcoin in the course of being a professional poker player, depositing money on sites, taking money off, sending money to people. it was just, I was my own bank. And that's why I like Bitcoin. So what really happened to me is through using Bitcoin, the interest became so overwhelming to me, and I became so passionate about it. I didn't even want to think about poker anymore because I couldn't, can't do two things at once. You need to focus, or at least in my point of view, I want to focus on one thing and be the best at that, not try to do two. So eventually I was like, you know what? I don't need to play poker anymore. I got myself in a good position. All I want to do is study Bitcoin full time. I had no aspirations to work in Bitcoin, to get a job, start a company. All I knew I wanted to do was study Bitcoin, do software engineering relative to Bitcoin, and be involved in mining. And through doing that, that's how I found myself suddenly on the advisory board for Riot when it launched at the end of 2017. Soon after, joined the board of directors, and over the course of serving on the board, became CEO of Riot earlier this year.
Yeah. Well, interesting. Great path. Listen, there are multiple ways to approach the mining industry, right? There's hosting, there's mining direct, there's building your own facilities. You all took the position of buying this huge Whinstone facility, and I've been there. It's an amazing facility. Talk to me a little bit about what that acquisition did for you guys, because it was so transformable, right? And then let's get a little personal and why the management team seems to be living together.
Yeah, so I'll give you a little context of how we approached that acquisition. We were in that Oklahoma City facility that you visited through the start of 2020. And we got to the point where we knew we wanted to expand our mining operations. That facility was at its limit. It had no more additional capacity. And we wanted to be more competitive and drive lower costs. And we wanted to own, so we wanted to own a bigger facility with lower costs. Because that's not something that, you can just pick up out of the rough, something you find on the street. We needed a solution while we were doing that search. So we started ordering an enormous amount of S19s, an industry-leading fleet of miners, and we were deploying those at CoinMint, which was a third-party hosting provider for us. And through 2020, we were evaluating the whole landscape. We worked very closely, our advisory group, XMS Capital. They assisted us, evaluating these options using their network to see what type of infrastructure opportunities Riot had. We were looking for infrastructure opportunities because we wanted to own our own destiny. We wanted to take further control of our supply stack. We wanted to have the ability to expand, and we wanted to have a very, very low cost of production. Through the course of that journey, we eventually came across Whinstone. And I remember meeting that team the first time, showing up that site and being introduced to these guys. And I could just feel the energy and passion they had for what they did. It was not only, first off, just pulling up to that site, I was amazed at the scope and scale of what was going on there compared to other mining facilities I'd seen. And then meeting these guys, and it was just kind of, I think, an instant click between our two teams. We knew that we were both very passionate about what we were doing. We were bringing the more, I think, specific Bitcoin and mining itself side. And these guys were bringing the infrastructure side to the story. And together, we all felt that we would have such a powerful team to really drive the expansion of our mining operations and deploy all of these miners that we've have on order with purchase agreements through Bitmain. So, and you touched on them living in the same house together. To me, that's part of the appeal. Like, these guys moved here. They're not from Rockdale, Texas. They all moved there and they said, we want to build this thing. We want to make ourselves a part of this community. We want to employ for the community. We want to give back to the community, and we want to live here. And I think, the way they describe themselves is the Silicon Valley, that show, the version of Rockdale, Texas, 4 guys living in a house, making it happen. And through doing that, they've generated such incredible results. That facility, what you saw, what we've shown in pictures, was just an empty lot of dirt, actually a forest, in January 2020. They showed up to build the facility. It was a forest. Over the next 6-12 months, they built the single largest Bitcoin mining facility in North America. They cleared that out and just entered in on an incredible development schedule that now that Riot has acquired Whinstone, we are continuing even further with an additional 400 megawatts, 4 buildings we're building on top of that. So very exciting team, very incredible team that they've built out there, and what we believe is truly a world-class facility.
And it's all pretty transparent online. You can see the whole thing getting built. It's super cool.
Yeah, I love that. Chad Harris, the CEO of Whinstone. If you guys follow him on Twitter, follow him on LinkedIn. He is posting videos all the time of what's going on. We just like to show what we're doing. There's so much work that goes into building this stuff. I talk to people a lot about that. Mining isn't just buying some computers and plugging them in. There is a lot of infrastructure that has to be built to actually hold all of that. And there's a lot that goes into before you even get to the racks that you're plugging miners into. And they're building these facilities from the ground up. So Chad and the Whinstone team being on social media, sharing what they're doing, I love to see it. I look forward to those videos every day.
And living together, the interesting part about this is, as I understand it, problems exist, right? You're paving the ground on a whole different industry, building a facility that is, such a great scale, but problems exist. And sometimes late at night, everybody gets together to try and solve the problems because they're living together. I think that's I've never seen that in a culture of a company. So moving forward on some key takeaways. I think what I want to cover are 3 takeaways on this interview. So why Bitcoin and Ethereum mining industry is so core to the growth of the blockchain infrastructure is one thing. Sometimes I don't think people get that. How the industry will grow, be transformed, and impact different industries, right? And then, of course, because it's capital intensive, how you manage that issue. So we'll begin by just saying, from the standpoint of Whinstone, you made the acquisition. It's moving along. Life is a bit about timing. You got the timing right, but I think it's all about skills and experience and the culture that you've built. Why was Whinstone right for you guys, but not right for Northern Data?
Yeah, so for the viewers who don't know the full history, so Whinstone was owned by Northern Data, which is a publicly traded company in Germany. So I think I can't speak for them. They have their own reasons. They're a European company. This was a US-based operations. They have a lot of focus in not just Bitcoin, but they do a lot of high-performance computing as well. They work on building out data centers with large GPU clusters to support initiatives outside of just Bitcoin. So when we came forward as an interested buyer, they saw this as an opportunity to capitalize on that and have their own capital to focus on other things that were maybe more closely aligned to what they were doing at the time. That was kind of the impression that I got, but for sure you'd have to ask them for to get their actual reason themselves.
But so it was right for you all because you are US based.
We're right for us because we are US based and we are 100% focused on Bitcoin and Bitcoin mining. That is our narrow focus. So that fit in exactly with what we were looking to do. That was a place we wanted to deploy more capital and build out our mining operation. So it was, I think both sides, we're happy here. This wasn't, a forced sale or anything like that. They had their initiatives, we had our initiatives, and this came together to make this transaction possible.
So coming back to Bitcoin, I guess and I think of Bitcoin and Ethereum as together as one common industry, crypto in terms of mining, exactly. But you've got a focus, right? Your focus is strictly on Bitcoin, not Ethereum. So speak to me a little bit about how the mining industry works as both a choice between mining just Bitcoin or a choice between having the flexibility to do both, and how you're handling that issue.
Yeah, so these two things, Bitcoin and Ethereum require two different sets of infrastructure. Bitcoin is done through specific pieces of hardware designed for mining Bitcoin called ASICs, application specific integrated circuits. Ethereum is a combination. They do have some ASICs now, but primarily is GPU driven. So, purchasing these arrays of GPUs to be focused on that can specifically run the Ethereum mining algorithm. So, if you want the option to do both, you have to procure two different sets of infrastructure. Not something you can, buy the same and switch back and forth depending on decision or profitability. So, we have not been involved in Ethereum mining or Ethereum at all. From our perspective, we are focused on specifically Bitcoin. We believe in Bitcoin and the opportunity that Bitcoin has for the future. We look at Bitcoin as digital gold as having so many transformative properties that are really reshaping how the whole world now looks at money and what the future world's financial system might look like. So that is the system, that is the architecture that we are focused on supporting. And so not involved in Ethereum at all, just focused on procuring Bitcoin mining hardware and the infrastructure to deploy that Bitcoin mining hardware and holding the Bitcoin that we mine through mining.
So there could not be a real possibility of you ever staking Ethereum on the side?
Not for us.
Okay.
I understand the interest some people have in Ethereum. I just have a different point of view. I think Bitcoin is the king, if you will. I think it is the dominant cryptocurrency, not only just by market cap, but all the properties that make it valuable. The fair launch that it had, the decentralized network that it has, the open system that it has, the fact that any individual in the world can download the Bitcoin Core software and validate and verify that blockchain for itself. That's, to me, is what makes a strong peer-to-peer network, is what gives a cryptocurrency value. So we are believers in Bitcoin, and that's going to remain the cryptocurrency we're focused on.
Yeah, that's interesting. When I was speaking to Michael Saylor and I asked him that question, he said, if you want diversification, go elsewhere. And that's kind of what you're saying too. And that's fine. That's you know what your mandate is, you know what you're good at, and you're going to run with it. So I've got to ask the question about consolidation in the industry. Do you see the industry in general, meaning Bitcoin and Ethereum or just crypto in general, seeing some consolidation in the future? And what would be your? I'm asking a professional poker player. What would be your strategy in that?
It's funny because we're actually going in the opposite direction of consolidation right now, right? Like, I mean, every week it seems like you hear about a new company that's announcing they're going to be going public. Like, so many new mining companies coming to the forefront, so many going public, reverse mergers, IPOs, SPACs, like it's all over the place. So definitely increasing the number of firms more so than consolidating right now. As far as the future goes, I do think one of the things that's great about Bitcoin, like we just touched on, is the system is so open and accessible to everyone. No matter what, I believe individuals will always be able to mine Bitcoin. They're always going to be able to be a part of that consensus system. I think when you look at the landscape of the very large miners, I do expect that in the future there will have to be some sort of consolidation, because I think I think there will be groups of miners that become better at certain things than the other, and they become more powerful combined than they are in part. Someone might have access to a bunch of low cost electricity, but maybe they don't have all the miners they need to fill that. While there may be another company that has all the miners, but they don't have that access to that type of infrastructure. And a way to look at that, you could look at the Riot Whinstone transaction like that. We had the fleet of miners, we didn't have the infrastructure. That's how that came together. So I can see that happening in the future with the growing array of new miners out there that are being publicly traded. And I think there's other reasons that could drive that as well. Management teams that work well together, geographical locations. There's two guys across the street from each other in, I don't know, Kentucky. Maybe they see the greater efficiencies they have together than apart. So I do think that, especially when you see what we're seeing right now, which is the start of so many companies, that things eventually come back around. So, you asked what my strategy is. My strategy, I think it's simply to stay the course of what we're doing. We have set an incredible expansion schedule. We are growing what is already the single largest facility in North America to over double that size. And we are just focused. I think we have our heads down, and the message we have to each other is just keep building.
So you have a dream, looking at 3 years when the halving occurs. Where do you see Riot? And the other part, and maybe this should be a separate question, so write it down. How do you manage the difficulty, right? In terms of the difficulty rate, because it's a really volatile metrics for you.
Right. Yeah. So the halving in estimated 2024. Now, if all blocks come on schedule, it's going to happen again in May 2024. So what was really interesting, let's first talk about this past halving, is you had all these S9s that people were selling as quickly as they could leading up to that halving, because that reward cutting in half was going to make those not profitable. So you had S9s being sold $20, $30 a unit. And after the halving, the price of Bitcoin appreciated so much that the mining rewards were more than they were before the halving. I mean, in the dollar-based mining rewards, it was less Bitcoin, but that Bitcoin was worth more. Over the next 6 months, those S9s that were trading at $20, $30, $40 before started trading at $700, which is amazing. So I think that I going into the next halving, first off, I'm optimistic that the mining hardware, the rate of improvement in Bitcoin mining hardware is slowing down on an absolute basis, such that this equipment today should last, a longer period of time. It's my hope, it's my expectation that going into the next halving, we're not going to see a fire sale of S19s like we did S9s. People are going to be continuing to run these. But a lot of that depends on what your cost of production is. The miners who benefited so much from that halving were the ones that had such a low cost of production, low cost of power, that they could scoop up all those S9s at a very low price and then have a lot of hash rate that turned out to be very lucrative going forward. So to me, that ties into your next question. How do we manage the difficulty? Well, the difficulty is a dynamic figure that's adjusting based on what the whole scale of Bitcoin mining competition is. The difficulty index is increasing as more hash rate enters the network, and thus blocks are being found faster. And when that hash rate leaves the network, the difficulty goes down. So it's always relative. And that also ties back to why it was so important for Riot, why we wanted to control our own destiny and have a lower cost of production. Because the farther left you are on that curve of production cost of your competition, the more indifferent you are to what that difficulty adjustment is. Sure, it's not ideal. It is disfavorable for the difficulty to increase unless you are mining less Bitcoin. But you are able to survive through more market conditions when you have those low costs. The difficulty can go up and that will decrease your margin, but you will still be remaining profitable with low enough costs that you can continue to be a competitor. And it's those miners that have a higher cost of production, that they are more to the middle or to the right of that cost curve of all miners, that when that difficulty goes up, they are much more sensitive to it, and they are potentially becoming unprofitable every time that index moves.
So what I'm hearing you say is, and by the way, what a crazy question to ask of a CEO, really, because how many CEOs have to put out there, what they're going to be doing in 2024 today. I mean, to a large degree, that's pretty far out, but this is something this industry has to be concerned about, right?
Mhm.
And along those same lines, what I just heard you say is the you're thinking that the level of advancement in the technology isn't moving in the same exponential pace. I don't know if that's the correct term, but
Yeah, on a relative basis, from one generation to the next, we're seeing substantial improvement. So the S9, in terms of efficiency, was 100 watts per terahash. S19 Pro, S19J Pros today are around 30, 31 watts per terahash. So that's a substantial improvement. However, the actual absolute improvement of 70 watts per terahash is not as dramatic as we've seen in the past. We've gone from 1,000 watt per terahash machines all the way down. The advancements in the past have become so much more dramatic. Now the process size for the chips on these ASICs, this becomes so small, it's become so competitive. We're getting pretty close to zero. Like, we have to use electricity at some point to run these algorithms on the integrated circuit. So we're at 30 watts per terahash. The lowest we can go is, what? There's a theoretical, I don't know what it is, 5 watts per terahash. It can't get too much crazier. And I think, so you asked how, what would we do to prepare for the halving? And it's focusing on that cost of production, keeping that cost of production down. We keep a industry leading flight of miners. We have an estimated power cost of 2.5 cents per kilowatt hour. It's based on a number of factors, but that is industry leading as far as I've seen. You combine that with, we have a next generation fleet of S19 miners, the most efficient miners out there on the market right now. That's what we're building at. So we think those combined, will position us well come the next halving. And I think with the strategy that we have deployed in the past and that we continue to execute on, which is expanding our fleet, growing our fleet, we will continue to procure hash rate. And, as new miners come out, we will evaluate those. And as the more efficiency improvements are seen, we'll upgrade our fleet with those. So I feel very, very good about our capability to expand and our capability to be competitive through future halvings like that.
So you have a role on the Bitcoin Mining Council. Speak to
I'm
us.
on the Bitcoin. I'm on the Bitcoin Mining Council. I don't know if there's necessarily roles, but yeah, Riot is on the Bitcoin Mining Council.
Fair enough, right? You're one of the key members. Talk to us a little bit about ESG and Riot's position, with ESG and how you're trying to reduce your footprint on an ongoing basis.
Yeah, that is an issue that has really come to the forefront this year. And it kind of also seems like every time Bitcoin, the price makes a sharp upward move, all these articles start coming out about, Bitcoin energy usage. And there's a lot of misinformation about that. That you hear figures about, how much energy a single transaction uses, which is completely false. Transactions do not use energy themselves, or they use a completely de minimis amount of energy, if any. You hear about, comparisons to the country of Norway. You hear about, if this trajectory continues, it's going to consume all the world's energy, whatever. What the story that does not get told enough is how much renewable energy Bitcoin mining actually uses. And there's a very simple reason for that. We are so focused on our cost of energy as Bitcoin miners that we're seeking out wherever you find that low cost energy. And simple market dynamics, simple market forces will dictate that you are going to find low cost energy where there's an abundant supply. Where you tend to find an abundant supply of energy is congested, isolated, renewable sources. Renewables, you can't build a hydroelectric plant in the middle of New York City. You can build a hydroelectric plant wherever that running water exists and you have the ability to build. So you look at Coinmint, for example, where we have miners hosted there. That facility is 90% plus hydroelectric powered because Bitcoin miners are indifferent to where they're located. They just go where that power cost is. It doesn't matter. We don't need to be near all sorts of things, wherever that power is, Bitcoin miners will go. And you see that example replicated all over the world. And the result is Bitcoin mining uses more renewable energy on average than any other major industry. And the Bitcoin Mining Council, the idea was there's a lot of misinformation about mining and its energy use out there. We kind of need to put our heads together and give some information so the market, so the world kind of knows what the reality is around Bitcoin mining and its relationship with energy. And I think we've been successful in, combining our data and reinforcing a few facts. One, Bitcoin mining uses about 0.2% of the world's energy. It is not a big use of energy in the world. And for that amount of energy it uses, it creates an open, free monetary system that is changing the world. That's a pretty good value to me. Beyond that, about 1/3 of all the energy that is produced is wasted. A staggering figure when I first saw that. 1/3 of all of the world's energy is wasted because there's not a buyer for that energy. It gets lost in transmission. It's just the type of inefficiencies that created. So of that, Bitcoin mining is capturing a piece of that. That's what you should think of Bitcoin mining's energy use. It's finding unused energy or surplus energy and coming at it. It's not showing up and taking it away from someone who would otherwise be buying it. So getting those figures out there, and then finally getting out trying to update what Bitcoin mining renewable generation mix-up actually is. And the last quarterly report the Bitcoin Mining Council put out, I believe the estimate was about 56% renewable energy powered for Bitcoin mining worldwide was the estimate. And that is just so far beyond what so many other major industries are. So I think Riot is contributing to that by one, we've had those mining operations deployment, and then two, operating out of Whinstone, which is the ERCOT grid, which has so much renewable energy in it because Texas is such a high potential state for solar power and for wind power. And those generation sources, there are so much in the queue in ERCOT every year, more and more and more are being deployed. And when you have miners, Bitcoin miners like Riot, who will deploy anywhere they can find that power, who will shut off at the right times and also buy power at the right times, you kind of have this implicit relationship that I believe is helping spur additional renewable projects in grids like ERCOT. Because the generation sources know that there is some sort of predictable demand that they can see in the market, they can capitalize those projects a lot easier and they become more financially viable. And I think Texas grid is an incredible model to the rest of the United States. I think the amount of renewable energy that's being developed there, not out of government dictation or force, but just out of market forces incentivizing them, is going to be truly transformative. And I think we're going to continue to see solar and wind transplant coal generation in that grid.
Yeah, it might be that as China, as the Chinese government did what they did to get rid of the miners, that North America will become the leader in the mining industry, and we'll do that because we're open to innovation.
I think so. Especially if you look at states like Texas. First off, Texas is a very business friendly state at a high level. Beyond just that, Texas is a very Bitcoin friendly state. Politicians, up to the governor's office saying we want to make Texas a Bitcoin mining mecca. They have an energy grid that is very conducive and friendly to Bitcoin miners, that Bitcoin miners can come in and help support. They see, I believe, the benefit that Bitcoin miners bring to stabilizing that grid. And all of these factors combined, I think, is driving a lot of mining to Texas, but to other states as well. States like Wyoming, Kentucky, Montana, South Dakota, North Dakota, like these states are seeing a huge influx of miners as well. So whereas a year ago, the United States was maybe 5-6% of the global hash rate in Bitcoin mining, today I think it's much more. I think it is closing in on probably 16 to 18%. I'm not sure what the recent estimates are. And when you look at all these publicly traded companies, of which Riot is one of the leaders, deploying so much hash rate in the United States, you have to figure that ratio is going to grow. And the United States is going to further increase its footprint on the Bitcoin mining network, which has been one of the goals for Riot. And I was trying to approach that goal just by growing our own hash rate, and then suddenly China bans mining, and just an immediate tailwind of that goal. So we're very happy to see it, and I think it's a great thing for the Bitcoin network.
It's amazing, and people don't give this industry enough credit for its transparency, right? We know what the industry is producing in terms of revenues, right? It's just a mathematical formula that we can figure out, right? Is it 20 or 30 billion, including Ethereum? Likely, right? Will it grow to be 50 billion in 2020 something? Maybe. It could be even much bigger. So I'm really excited about it. So along those same lines, I always have two wild card questions, and that's
Okay.
not because you're a poker player. I'm sorry. and I know that you're very focused strictly on the Bitcoin mining industry. But what other things should you think investors be looking at currently that they're not looking at, that they'll look at backwards in hindsight and say, man, that was obvious?
I think what investors, I think what's Riot has that's important is our credibility and execution. We've initiated these growth plans and we have continued to execute on them. And I think what helps us so much in that regard is the infrastructure that we own. Through Whinstone, through the team there, we have a development pipeline that we're building out to host these miners. And like we were talking about earlier, building this infrastructure is a lot more challenging than it maybe initially sounds. It's not just throwing up a building and plugging miners in. You're managing an incredible amount of energy, and there is a lot that goes into that, and there's a lot that goes into keeping these machines cool. They're running 24/7. They run very hot. So people I think discount that because they look at Bitcoin mining as more like kind of like a tier 0 data center. Not the whole type of nice data center you typically see, just kind of throwing things together. And while it doesn't have the properties that a tier 5 or tier 3 or 4 data center might have, it does have a lot of know-how that goes into making that work. And I think what investors should look at, and I think what may become obvious in hindsight, is who had the capability to build and execute on their expansion plans. So that's what I think the infrastructure doesn't get as much love as it should be in the industry right now.
Okay, I got it. So the other question that I always ask is eliminating the financial services industry, because that always seems to be everybody's answer. Which industry will be most affected by the blockchain?
When you take out financial services.
Yeah. I mean, it could be utilities, by the way. People don't even talk about that, right? Insurance, healthcare.
I think first, financial services is obviously a huge one, because I think Bitcoin is an incredible tool for people to store their own wealth, to have sovereign control of their own wealth, and to not have third parties in control of their payment systems with others. So obviously, to me, that's kind of the big benefit here. But I think Bitcoin mining, so as an extension of Bitcoin, really does have the opportunity to have a huge impact in the energy industries. I do believe that we will see more generators, energy generation sources, energy companies getting involved in Bitcoin mining when they kind of understand this is a great tool for us to use. How I talk about Bitcoin miners finding surplus energy providers themselves can be a part of that as well. They can partner with Bitcoin miners and they can solve their own problems directly, as opposed to Bitcoin miners kind of finding them on the grid in a roundabout way. And additionally, I think Bitcoin has the opportunity to provide a pretty incredible environmental impact through natural gas flaring. There's a lot of Bitcoin mining companies out there now that are focused on taking flared methane gas from natural gas production and converting that to energy in Bitcoin mining. Kind of same ties back to what we talked about earlier about Bitcoin miners being indifferent to where they locate. You can take a container of Bitcoin miners, you can go out on an oil field somewhere and you can capture some flared wasted methane that's there and you can turn that into energy. And as Bitcoin proliferates and thus Bitcoin mining proliferates, I think you can see more and more miners doing that. And so not only, I think, having a positive environmental impact, but being very closely tied to that industry as well.
Jason, thank you for spending the time with me. I look forward to seeing your company grow, be successful. And I thank you for all your hard work in block and tackling for your shareholders. Be well, be healthy, and keep up the good work.
Well, thank you very much, Dan. Thank you for having me. And we look forward to having you out the Whinstone site again soon. You can see everything that's changed since you've been last there.
I'm sure. As on the internet, by the way, you can see it.
Yeah, on the internet. Yeah.
Be well. Bye-bye.
All right, you too. Thanks, Dan.
Thanks.